When you hear about the year 2008, a lot of things come to mind, right? But one of the greatest things about that year is the 2008 financial crisis, which surely made its way through world's history. Now, did you know that one man actually predicted this crisis to occur? That's right, and that is no other than Michael Burry. And he is now, once more, cooking up another feisty prediction of an upcoming financial crisis. Although the Federal Reserve has not yet confirmed a recession, Michael Burry still believes that we're headed towards one. There are several factors that are causing concern, including the Fed's decision to raise interest rates and the collapse of banks. Burry is so convinced of this upcoming economic downturn that he continues to share his predictions on Twitter using the handle @MichaelJBurry under the account name CassandраBC. However, he deletes his tweets shortly after posting them, adding an element of mystery to his predictions. It's unclear why Michael Burry deletes his tweets shortly after posting them, but it may add to his mystique and make him seem more exclusive. However, thanks to his dedicated fans and modern technology, there are ways to recover and review his predictions. For example, the Burry Archive is a dedicated account that collects and shares screenshots of Burry's tweets, allowing people to review his takes on the economy and the stock market. When a movie like The Big Short is made about you, you can expect to attract paparazzi and die-hard fans who will track your every move and tweet. But what are Michael Burry's warning signs for the economy now, and what should we be doing with our money? It's difficult to say for sure, as Burry's predictions are often cryptic and can be open to interpretation. Despite being out of the spotlight for a while, he's back in the conversation because of his recent Twitter activity and his warning signs about a potential economic downturn. So, in this video, we'll explore his past predictions and what he's currently saying about the state of the economy. This is Financial Intellect, where we promote that to be finance savvy, we are your buddy. Don't forget to hit the subscribe button so that you'll be the first to know whenever we upload a new video. Now let's get right into the video. In early 2005, Michael Burry predicted that the real estate bubble was going to burst, possibly as early as 2007. He based this prediction on his observations of the mortgage lending practices in the years leading up to this. In response, he decided to short the market and focused on getting investment firms to sell him credit default swaps. Unfortunately, his prediction came true, and the real estate market did indeed collapse, resulting in the greatest financial crisis the world has seen since the Great Depression of the 1900s. Burry's foresight and investment strategies helped him and his investors avoid significant losses during this crisis. During the financial crisis in 2008, while many people suffered losses, Michael Burry was able to make a significant profit for himself and his investors, totaling over $100 million for himself and $700 million for his investors. This is why Burry's investment strategies and predictions are still worth talking about today. Recently, Burry has once again returned to the spotlight due to the current bank crisis that began in early 2023. This crisis has the potential to challenge the 2008 Great Recession as the worst financial crisis we've seen in our lifetime, and Burry's insights and predictions on the matter are highly sought after. On March 10, 2023, state regulators shut down Silicon Valley Bank, a commercial bank responsible for funding some of the world's premier technological innovations. The bank experienced a significant drop in deposits, primarily due to the increasing interest rates. However, this isn't just a singular case, and other banks are also experiencing similar challenges. The recent closure of Silicon Valley Bank, due to a significant drop in deposits caused by rising interest rates, could be the beginning of a series of bank failures. With banks trying to recover from pandemic-related losses, tens of thousands of people are looking to experts to assess the situation and predict what may happen in the future. Given Burry's past success in predicting economic trends, he has once again become the center of attention, and people are eagerly waiting to hear his thoughts on the current banking crisis and the overall economic situation. In early 2023, Michael Burry lit a flame in the Twitter world with his tweet that says the following: "Inflation peaked, but it is not the last peak of the cycle. We are likely to see CPI or Consumer Price Index lower, possibly negative in the second half of 2023, and the US is in recession by any definition. The Fed will cut and the government will stimulate, and we will have another inflation spike. It's not that hard." Despite the recent bank failures, the Federal Reserve has decided to continue with their plan of increasing interest rates. Burry has noted that while the highest inflation rate has passed, it may cycle back to that level again in the future. The highest inflation rate recorded since the Great Recession was observed in June 2022, reaching a record high of 9.1%. In January 2023, the inflation rate was recorded at 6.4%, while in February, it dropped to 6%. However, Burry predicts that inflation might rise again to the levels observed in June 2022 by the second half of this year. The recent banking crisis that occurred earlier this year might be a contributing factor to the situation. Despite the lack of widespread discussion on the banking collapse, it is still an ongoing issue that could have significant implications for the economy. Burry correctly predicted that the CPI would increase again, but it might happen sooner than expected. In another tweet, he gave his opinion on Salesforce's job cuts, which were widely reported on the media. While many people were upset about Salesforce's decision to lay off 10% of their employees to save money during an economic downturn, Burry had a different view. He stated, "CRM should have been down 25% on those job cuts. Job cuts are so not the reason to own that." In an interview, Co-Chief Executive Officer Mark Benioff stated that they hired too many people during the pandemic, which led to the economic downturn they are currently facing, and he takes responsibility for it. On January 23, 2023, Michael Burry posted a mysterious tweet with just the word "maybe" and a picture of an ominous graph. The graph that Burry shared shows the S&P 500, which is a stock market index. He circled a specific area in the graph that showed a slight upward trend from September 2001 to March 2002, which could indicate a peak before a downward trend. His cryptic tweet with the word "maybe" suggests that investors should consider selling their stocks, as this may be the last high before a downward trend. This is similar to the current situation we are facing, and Burry's tweet may serve as a warning to investors. Burry's tweet on February 8th, where he used the phrase "this time is different," is seen as sarcastic by some of his followers. This is because many of them interpreted his previous tweet, where he urged people to sell, as a sign that the market was headed for a downturn. With the latest tweet, Burry seemed to be implying that people shouldn't be fooled into thinking that things will turn out differently this time around. Many believe that Burry's recent tweet is meant to be sarcastic and to encourage his followers to sell their stocks. After weeks of silence, Burry tweeted, 2000, 2008, 2023. It is always the same. People full of hubris and greed take stupid risks and fail. Money is then printed because it works so well. Michael Burry followed up with another tweet the day after, saying, "This crisis could resolve very quickly. I'm not seeing true danger here." Given that the collapse of SVB occurred on March 10th and Burry began tweeting on March 12th, it is highly likely that he was referring to the banking crisis in his tweet. During the discussion around the banking crisis, there was confusion among many whether Burry's follow-up tweet was genuine or sarcastic. However, Burry tweeted once again, this time about the collapse of banks due to lazy ESG funds. In this tweet, he expressed his hope that humanity would move away from taking impatient and lazy shortcuts in all areas. The exact quote was, "My hope is that the human race will reverse direction away from impatient, lazy shortcuts, always and everywhere." Burry's stance on the crisis becomes clear as he expresses his belief that it won't last long and will soon be resolved. In a tweet on March 15, 2023, he draws a historical parallel to the 1907 Knickerbocker Trust failure, which triggered a panic and bank runs. However, JP Morgan intervened and made a stand, which helped resolve the panic within 3 weeks. Burry compares this to a recent situation where someone else made a stand over the weekend, indicating his optimism that the current crisis may be resolved similarly. Burry's implication is that although the banking crisis is a real concern, he doesn't think it's big enough to cause a widespread panic. He suggests that the crisis will soon resolve itself and that the market has already hit rock bottom and will begin to rise again soon. Burry also tweeted a chart showing that Signature Bank and SVB had the most uninsured deposits, which makes sense why regulators closed them down, but it doesn't necessarily mean that other banks should fear the worst for now. However, some news sharing and financial media sites misinterpreted Burry's tweets, claiming that he suggested USB and Comerica were next to fail. Burry refutes these claims. There's an article out there saying I was suggesting USB and Comerica were next. That is not true. One chart with a couple of data points zero, such cannot encapsulate all a bank is. In his latest tweet, Burry directs his criticism towards the current Federal Reserve Chair Jerome Powell by saying, Powell should have just said, I don't know, and say it again and again as he sits on his hands for the next 6 months. Then we might get some real price discovery. As the banking crisis continues to unfold, Burry is likely to remain active on Twitter. However, Burry is not just a Twitter user, but also an analyst who continues to analyze trends and patterns and how events such as this affect stocks, the S&P 500, and the overall economy. Burry's success in predicting the 2008 financial crisis was not a stroke of luck, but rather the result of his rigorous research and analysis. He spent countless hours poring over data, studying market trends, and questioning conventional wisdom. His willingness to challenge the status quo and think critically allowed him to see what others couldn't. Burry's legacy as a market predictor continues to inspire many investors and analysts today. His story is a testament to the power of independent thinking and the importance of deep research and analysis in the world of finance. That's it for today. Thanks for watching. Don't forget to hit the like button if you enjoyed this video and click on subscribe if you wish to view more videos just like this one. See you in the next video, financial buddies!